What is going on? Welcome back to the channel. Today we're going to talk to you about Opendoor. Give you a quick summary of what the hell is happening, where it might be going, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So Opendoor is down 9.1%, 560 the high, 507 the low. So a lot of institutions are selling out. So you're starting to see more and more volume as the day does come to an end. And there's a couple different reasons for that. One is rumors of the states planning on attacking Iran over the weekend. So of course, people don't like that. Plus today is the last trading day before the potential government shutdown. And that's going to be coming out midnight tomorrow, so on the 31st. So definitely a lot of fear. Markets just are kind of washing their hands, and this is already over and above the pre-existing fear that was started by Powell and also Microsoft earnings, how now people are saying that we are in a AI bubble. As far as Opendoor's volume, roughly around 43.3 million. We did have one data point that came out, didn't really influence the market all that much, but PPI came in at 0.5, forecast of 0.2. So that in among itself does signal that inflation is a little bit sticky. So far we have roughly around like 5 or 6 different negatives really suppressing the broader market. So Dow is down 0.42, S&P down 0.56, NASDAQ down 1.08, even silver down 28.6%. So a lot of people are even looking at silver and the sell-off that's occurring and correlating that with how '08 started. So definitely, like I said, a lot of interesting stuff. But aside from that though, Opendoor did put out some news first thing, and that was them announcing the date of their earnings. So for those of you that have been tuning in to my video, I did say that it was either going to be at the end of this week or if not early next week. That's when they were going to announce the date of their Q4 earnings. And lo and behold, here we have it. So February the 19th. So that'll be a big deal for Opendoor. And that's a massive understatement. It's going to be huge. And this is going to really show the broader market what the hell Opendoor is doing, how it's going to be really shaking things up, be the innovative company that Wall Street is hesitant to believe, or if it's going to be kind of a flop. It is going to come down to this earnings and more specifically the future guidance. Closer to that date, I'll go over some expectations, kind of some of the key metrics and so forth. But this definitely is pretty good. The only other thing that I wanted to bring up was posted by this individual right here, by Max. And it looks like he used AI to analyze all the open positions. So the 52 open positions that Opendoor is hiring for. And this is something I've always stated. When a company isn't really putting out any news, all you have to do is look at what they're hiring for. It gives you a very good insight to kind of what they're doing. So I'll give you a quick overview, or just you can kind of just pause the video and look at it. But a lot of it is AI driven, and this kind of matches with Kaz's bigger plan. Interestingly enough, Kaz even did comment just saying that this is a shockingly good way at looking at a company's priorities. And so yeah, that's honestly very, very accurate. So definitely using AI to kind of catch what Opendoor is doing. So I think a lot of big things are coming. As far as shorts, that are definitely throwing a lot at Opendoor today. So they're increasing 766,000 shares, 15.4% of the free floats being shorted, works to be 120 million shares overall being shorted. Still seeing some signs of naked shorting, so more shares being shorted than on loan. Plus, you do see cost to borrow minimum being negative. So you have two different signs of manipulation going on. From a option standpoint, 3.8 million in calls, 2.1 in puts. Roughly the bulls are anticipating for it to be about 550 going into next week. Bears are anticipating for it to be sub 5. Right now, kind of mixed. So anything with a bid is a sell, anything with a ask is a buy. So institutions are kind of more leaning towards the sell. Unfortunately, these are all the transactions occurring on the dark pool. So given how active shorts are doing and what they're kind of how active they are, it is fair to assume that all this is kind of linked to them. With it closing or very close to closing at 509, it is below all the key fib levels. So definitely it's not doing that great. Looking at the 1-day chart though, 510, that was going to be a key support. So if it does close below that, then this is where you could hypothetically see that 428 being the next strong support. So things are really starting to kind of hit the fan, as what they say. So Potentially 428 might be, I guess, the bottom. This is where realistically you could see a nice V-shaped recovery, but it all depends on if the States does truly attack over the weekend, and if there is that shutdown. That's going to be some of the big deciding points in the broader market. Aside from all of that, though, on the actual chart itself, it's not doing great, and I've been very open about this. I think if they would have kind of concluded the shutdown, and let's say Microsoft's earnings would have been on point with their future guidance, and yeah, you could have saw a nice recovery to at least that 10-day moving average, but unfortunately it seems to be going the polar opposite direction. So the 200-day moving average sitting at 448 is going to be, again, that key level, and that does match with the fib level. So that is going to be the line in the sand. If it breaks below that, then all hell is going to break loose. So if you're wanting to catch the bottom, I'd say it would be very much oriented towards there. And for today, best case scenario, it does close above that 510 range. So let me know your general thoughts on Opendoor. I know today's kind of a crappy day. A lot of people most likely were getting margin called. So I think today is also a very good learning lesson for a lot of retail investors on margin, because I think a lot of investors did recently start over the last couple of years, and for the most part all they saw is just green, except for April 2025. That's where things kind of started to go south. But yeah, I think a lot of people are just used to just nothing but green. Buy the dip and it recovers. This is now the first time where it is actually breaking below key levels. So let me know your thoughts. Hopefully everyone has a good weekend. Are you buying? Are you selling? What are you generally doing? One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades, worthwhile to pop over there and check that out. With all that, appreciate all of you watching.